Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers, and I am finally reaching that inflection point that I think a lot of us are going through right now in the stock market where, quite honestly, I'm running out of dry powder, reasonable dry powder to invest into stocks right now. So when it comes to having cash on the sidelines to invest in stocks, you always want to be in that 10, maybe even 20% range in times like this. And from continuing to buy, like I have since this whole thing started back in February or so, now I've reached this point where you combine it with some family expenses that I have going right now, and I just do not have a lot of money to take advantage of these great deals. So today we're going to talk about some of the things that I've got in front of me and some of the investing decisions that I'm going to have to make over the next 30 to 60 days, particularly in situations where the market continues to go down. And that's what makes things very difficult. You know, when most of your investments are positive, or let's just say at least at par, you have a lot of different strategies you can do to kind of move things around, but that's not the situation that I'm in right now. So let's jump in and talk about some of the challenges I got on the horizon. All right, so the first challenge I face, every spring is taxes, and I'm sure many of you can relate. So you pay your tax bill. I almost always have a tax bill to pay because of some small business ventures that I'm in. But spring is like a double stack of taxes because you make your annual filing by April 18th, which typically has a bill for me attached to it, as well as local and state taxes as well. But then right around the corner, less than 60 days later, the first or second installment of your quarterlies are due too. So anyone out there who has a small business or alternative income streams, they typically pay quarterly taxes as opposed to when you get a paycheck from a company, those taxes come out on every payroll. But if you have income that comes in without tax, then you have to do this quarterly plan. So for me right now, it's just a little tighter of a time period because you get double hit between April and June. So the good news is this is nothing new to me, and I've been on the schedule for many years, so I know what to expect, and I have the appropriate amount of money saved for it. However, it does not lead this time period between, say, March and June. This time period does not allow for a lot of extra income to be investing in stocks. Okay, the next big bill I have coming up here in the very near future is just the family summer vacation. Now, of course, you can be the Scrooge McDuck and tell the family that no vacation this year because we need to buy the bottom of the stock market. But I can tell you, as someone who's married with 3 kids, that's not going to go over very far. But even beyond that point, I think the memories and the time shared together as a family is important. And honestly, I wouldn't pass that up. Okay, so those are some of the budget challenges I have in front of me. And again, they're accounted for. I've saved for them. I'm not going bankrupt. But the real challenge and purpose of this video is that I just don't have a ton of extra money to go in and buy stocks. And that's kind of unfortunate because the prices that we're seeing look good, certainly from a long-term perspective. So what about the concept of selling some of my loser stocks, of which there are plenty to choose from? What about selling some of the losers and buying into winners? Well, I thought about that, but as we look at the roster of stocks that I own, it makes it a little bit more difficult to make that decision, right? So right at the top, we have my QQQ, which is a position that I just started. So I'm not selling QQQ, and I don't know of a time that I ever will, certainly over the next many, many years. All right, next up we have Visa, and this is one of the few stocks that I've actually managed the cost basis quite nicely. And Visa, I'm up just a hair, 1.55%. So theoretically, I could go in and get my $12,500 worth of Visa stock and redeem it and be ready to invest some of that money. The problem with that approach, though, is that I will essentially be selling stocks that I've owned for over a year, right? So I don't have the same capital gains tax implications. I have long-term capital gains on a stock like Visa right now. So do I really want to sell a stock that I can take out long-term capital gains at any point? Do I really want to sell that at 192? And then the other side of the coin, just from a sheer headlines perspective, Visa, with the return of travel, is in very, very good shape to outperform this year. I really struggle to look at Visa and say it's a good idea to sell this one. Now, next up, we have PayPal, which is, of course, an absolute train wreck. But it's such a train wreck at $75 that I keep asking myself, how much further could it possibly go? And do I want to start chopping some of that off? Now, with PayPal, I do have several shares that I bought back in the sort of 150 to 200 range that I could take the losses on those. I'm only getting $75 a share though. And keep in mind, with losses on a tax year, the maximum negative credit you can get on your tax return is minus $3,000. Now you can use losses to offset gains and let's just say get to a net zero. But for me, as someone who's pretty bullish on PayPal in the long term, certainly at these prices, this one doesn't strike me as a good candidate to sell considering what I would get in return. You see, I have 125 shares. Maybe as the year drags on, if PayPal gets back closer to $100 or something, I can entertain the idea of selling my oldest 25 shares. But as far as right here today, it just doesn't strike me as a good time. Zillow is one that while the real estate market is in a lot of distress with the high mortgage rates and everything like that, I didn't buy Zillow to make money this year. I tried to buy it at a good price for the long term. I'm down on it, but it's just not one that I'm interested in selling, and it could actually take a couple years to fully pay off. TJX, so this is TJ Maxx, and this is one stock that I would say has the best potential to be sold. There's a lot of rationale with my TJX shares. First of all, I've held them for over a year, so I can get the long-term capital gains rate on it. It's only about $5,000, almost $6,000, but this one has flirted with the $60, $65 range, so I'd have to consider that. Even though I love TJX and I like shopping at their stores, and I also think that discount retail is going to have a huge year this year, I might be in a situation where I just lock in my wins on this one and look for other opportunities. All right, Magnite at $9.50. I think digital advertising is getting beat up right now, and I think it makes a strong comeback. I'm just not interested in selling it. TQQQ, I do plenty of videos on the Qs, and this one at $28.39. I can't believe it's under $30. My cost basis is $46. The only thing I need to do on the TQs is simply add more. I've let my cost basis come way too far down. I have 131 shares. This would be, believe it or not, this would be one of the first stocks that I would start to buy. And the whole rationale for that is in a different video on holding TQQQ for long. So I would say, honestly, on my buy list right now would be something like the TQs, but also taking advantage of the regular Qs, because if I can get to 100 shares of the Qs over the long term, and you start thinking about call options and stuff like that, this can be a very profitable long-term investment, certainly catching it while the market is falling. All right, would I sell Rocket Mortgage at a 58% loss? Probably not. Probably not right now. I need to dig into their earnings report a little more. I know 2022 is going to be garbage for Rocket, but they have a lot of opportunity to lower their costs and increase their profits in an environment like this. So we'll see how it goes. I mean, the headline is obviously mortgage demand falls, but all of their loan originators, the agents, the call center, whatever, don't forget, we'll probably see in the headlines soon that they're just going to lop off about 50% of their staff. That will actually be a boom for the stock. And keep in mind, too, with Rocket, that they typically do a special dividend every 6 to 12 months. We just had one in January that brought in $400 or something for me. So Square at 74, I'm down 65%. This will be one, honestly, it's not even worth fiddling with right now. We'll see if Square delivers or if they don't as the year goes on, and this would be a candidate for me potentially at the end of the year for tax loss harvesting, but there is no reason to get excited about that right now. I'm just going to let things play out. DraftKings, $11 versus my 33. It's down 66%, and wouldn't surprise me if it has more downside left with all this negativity. However, I still believe in DraftKings, and believe it or not, I would probably add small lots here at $11. Palantir, $7.12. They just got absolutely destroyed on slowing guidance. With Palantir, I would just say that, I've talked about it 100 times. It's a longer term play. You either believe in it or you don't. And one secret here for Palantir, if you think about it, as opposed to like iPhones and stuff like that sell throughout the year, it's contract business. You just never know what month you're going to wake up and they get some, $10 million contract that boosts their EPS forecasts and all that. So I'm hanging on. I'm not in a big worry situation with Palantir, and I'm not particularly interested in selling. All right, KWeb, 2482. This is Chinese internet stocks. This is one that I'm actually more interested in adding to. I'm not interested in selling this at all, particularly at $25. Got 69 shares. I'll just say it'd be much more likely for me to add shares to KWeb than certainly to sell at this point. And then lastly, Sabre, which is, huge disappointment. Travel stock, $6.55 on an $11 investment. This could be sold at any time. I, for one, am not concerned in the least that we will see travel headlines coming out infinitely positive over the summer months. So with Sabre, it's on the deck. I have no problems chopping this one, but $6.55, I mean, what's the hurry? You're talking about $1,300. It's not going to solve any of my problems in the immediate future, so I might as well just wait it out. All right, guys, so those are the thoughts on my situation. The big opportunity, though, for me, in order to plow more money into the stock market, is really quite simple in theory, and that is make more money, right? Bring more money into the household. So for me, I'm always grinding gears, looking for new ways to bring in more income. And this year, for all of us, we're going to have to bring in 10% more just to have the same amount of purchasing power. So even if you're sitting pretty right now and you have all your bills paid, it still makes sense to start thinking, how could I, if I needed to, or I wanted to, how could I bring in a couple extra bucks? In my case, I'm looking for extra money so I can invest at these low points. All right, guys, let me know how your situation's going. Do you have any big expenses coming up that are kind of cramping your investing style here on the dips? How's your dry powder situation? Please share in the comments. As always, please give this video a like, share it with your friends. Don't forget to check out the Seeking Alpha Premium special offer that's in the description. Hope everybody's having a good day. We'll see you on the next video.